Hey guys, so this is going to be a video demonstration, a bit of a showcase of the Advanced DCA Tool. So it's a custom script that's been written to be used with the platform Freebies. Now, if you don't know what any of that means, essentially Freebies is a platform where people can use trading bots that buy and sell cryptocurrencies with a view to make a profit. Now, what this script does is it adds a bunch of cool new features and functionality to the existing bots that Freebies have. It's taken a really long time to develop. I just want to show you a few demonstrations on how it works, what it does, and how it might compare to other strategies that are out there. We're also going to go through in the video how it generates the signals, give you some examples of trading setups, show some back testing, some replays. Also want to show you that there is a Pro and a Lite version. The Lite version is really intended for maybe people who are a bit new to DCA bots or trading in general. I want to show you some of the comparisons between the Lite version and the Pro version. Now, we do have quite a lot to get through in this video, so I just want to try and I want to try and make this video applicable to the masses. So we're just going to run through some real basics here. What is Freebies? Have a look at their website, freebies.io. Bit of a strange looking website name, but don't worry. Have a quick read of it. Really big platform. A lot of people use this. It basically allows you to place automated trades that buy and sell for you. This can be with a dollar cost averaging bot or a grid bot, for example. Yeah, lots of really useful tools, lots of really useful user interfaces. The script I've written works with this website. So this brings about a more effective strategy to an issue that many of us experience, which is typically if you're left within a trade for too long, or a trade that doesn't execute a take profit, you're going to be left with unrealized losses, essentially, which we typically call red bags. On Freebies, traditional safety orders work to bring the average price down closer to the current price. The issue is the safety settings input by the user are fixed. They don't move. The safety orders are placed blindly, and regardless if there's ongoing signs that the price is dropping further or that there's maybe signs of a reversal. This script aims to outperform traditional safety orders long term by being able to exit difficult trades and take profit sooner. That's the long and short of it, pardon the pun. Anyway, let's show you an example. Let's show you a visual example. First and foremost, we're going to go up to indicators. We're going to type in EMU, and depending on whether or not you've been accepted so far, we'll have either a red or a green indicator here. Now pick the one that you've obviously purchased. We're going to go with the Pro version today. Let that run up. And depending on sort of how fast the servers are and how quick your computer is, it'll load up there. So now you'll see that our background has changed. I quite like to be able to see a 24-hour period of what sort of trades are going on. So if you go up to the indicator on the top left here, you can double click it or you can click the gear icon. It'll bring about a large menu here with lots of customization, lots of settings and stuff, but we won't get into that just yet. What I do want to show you first and foremost is how traditional safety orders operate and how this script with dynamic safety orders operates. So let's get rid of that for the moment. We're going to click our view icon here. And now this is how traditional Freebies safety orders operate. We have our base order here for whatever cryptocurrency it is. It doesn't matter. And our green line is our take profit, and our orange line is our average price. Now at each of these blue lines, which get wider and wider apart from each other, we will place safety orders in volume that will get larger and larger from each other. So you can see here $46, $32, $23, $16, $12, and our base again, which is 12. Now, depending on which settings you choose between, you can have these step differences. You can set them so that they don't increase in size, they actually remain the same size, or they get smaller in size, so they get more compact or much larger in size. Depends on what your preferences are. And you can also set the initial deviation from the base order. So let's say, for example, you don't want to place your safety order until it's 5% below the average the market price. You've got the customization, but generally speaking, the settings that we have here, which are 7 safety orders in total, maximum. Each step is scaled by 1.5. Each volume is scaled by 1.4. We have a base order size of $12. We have a safety order size of $12. These are really well-rounded settings that are being back-tested by the community. Some really great individuals out there that have tested these, and it allows for the cryptocurrency itself to drop by 60% and you're still fully covered. So these settings are very good in and of themselves. However, what this script is capable of is better. So you can see that while we have dollar cost average down and our average price is quite low, unfortunately we wasn't able to hit this take profit right here, and the trade has continued, and we're off into the distance. And in fact, being the 12th of April today, we still have not closed on this deal that is spanning from the 5th of April. So it's lasted a few days and we're still stuck in this trade. Now, if I was to come over here, dynamic steps, it waits for the current price to drop below the safety line. And once it has dropped below the safety line, it looks for an opportune moment to enter. So it won't enter exactly on the line like these ones do, you know, blindly regardless of the market. It will only enter if it believes that the market is going to reverse, or it believes that the market is strong, and there's a good chance of you taking profit. Now, the calculation involved to create a signal like that, the script uses a combination of stochastic oscillators, MACD, EMA, strength indicators, Ishimoku, cloud, and different time frame resolutions to determine a good entry point. For the purposes of this, we're just going to click dynamic steps, and let's just have a look at what the chart does. Okay, so we've had a chart change now. You can see our average price has really come down a lot. We can see from our original base order, we haven't actually placed a safety order until we've probably dropped quite a lot below our original deviation here. So we've placed our base order, the price has moved, we've dropped below, and there's not been any good opportunity that the script sees until this point. We've seen a good opportunity, we've bought, and now unfortunately the market has continued to drop. Again, we've gone through our next line, and interestingly, this one is almost bang on the line. We've then dropped again. We didn't want to be buying on this big red line. We've waited. There's a bit of market recovery. We've purchased. Okay, we've climbed. Unfortunately, we haven't quite hit our take profit. We've dropped again. Same situation. We're below the line now. There's not been any good opportunity till this point here. We've purchased, and from then we've actually gone ahead and we've taken profit. We've then entered new deals, which are almost right there taking profit. And I imagine again we'll end up in a new profitable trade. So that's how it basically works. What I want to show you now is the difference between the two. So if I was to take a horizontal line here, this is our average price. I'm just going to plot a line right on here, and then we're going to go back to our basic steps. We're going to look at where our average line is here. Okay, so let's just plot that one on the chart there. Now let's go ahead and remove the viewing. So you can really see a big difference between the two. If I was to take our chart here, now that's a difference of 6.5%. When you're dollar cost averaging, typically you're looking for a profit of anywhere between sort of 1% and 3%. So if you're waiting for the market to recover by 6.5%, that's a really big difference. That's going to make a big dent into your profits, okay, and the time spent within a deal. There you go. You can see the two on the same chart. If I just go back to dynamic steps, okay, and it drops it right down again. Okay, now you can get in and out of trades far more quicker than perhaps what we could have done using the traditional safety orders. This is great. What if I told you it could be excellent? We have another setting in here. So next to dynamic steps, we have basic volumes and dynamic volumes. Now, just to give you a bit of background about dynamic volumes, we first need to talk about basic volumes. So our basic volume is calculated, as you can see here, we have $12, $12, 16.8, 23, 32. The way that that's calculated is we enter our base order, we enter our safety order, and with every safety order that we have, it will increase in size by 1.4. So if you used to take 12, for example, times it by 1.4, you get 16, times it again, you'll get 23. And each of these orders get larger and larger in size. That brings your average price down. By having a larger spend at a lower point, it can bring your average price down. Now, the way that dynamic volumes works is we use these settings here. So we have a desired required change. Now, what that means is it looks at the relationship between the average price paid and the current price. Now, what is that difference in terms of percentage? Okay, we are, let's say, 10% away from the average price. Well, we need to bring our current deal in line with the current price. Otherwise, it's a runaway train. We get further and further away from the current price, and it's difficult to get back into a profitable trade. So the way that dynamic volumes works is it compares the percentage difference between the current price and the average price. And if this is greater than the desired required change, which is this setting here, and the current price is below the plotted blue line, and there is a valid signal, then the safety order will be placed. The size of the safety order will be proportionate to the distance between the current price and the average price. This is to bring the average price to the desired level. So if we go ahead, enough of the talking, I'll give you a demonstration. We click this one now. Okay, now you'll see a dramatic difference at this point. So while we was looking for a take profit up here or a take profit here, we've actually hit our take profit, not down here, but actually way back, closer to our original trade. So here's our average price again. We haven't had a good opportunity to buy until we've reached this point here. And now that we've reached this point, we're looking to close the gap between our average price, between the current price and the average price, and we want that to be 2%. So if I was to take our plotting tool over here, where is it? This one. All right. So that's the point that we've entered. We've placed our right there. I haven't got it bang on, but there you go. Yeah, 2%. So that's the difference that we would have to make up. If I just go ahead and do that again right here. All right. Again, 2%. Next safety order over here. Again, 2%. And then we've actually hit our take profit. We've then re-entered and we've placed a new deal with a base order right here on this white line. So that is actually after our take profit, and we've come back down again, dollar cost averaging. So, and now, as you can imagine, the way that works is each deal is going to get larger than the last. We've started off with a base order of 12. Our second order is $33. There's $68, and then we've seen quite a large difference here of $275. You can set your maximum budget. You can also set your maximum safety orders again, but by the time you reach 10 safety orders, these volumes are going to be really quite significant. So because of this, the script allows you to set your maximum budget. So yeah, you can see how we've gone from a 3 comma traditional strategy that would be like this: basic steps, basic volumes. Okay, and of course we've missed the mark. Just clear the chart up a little bit here. We bought in, the market's dropped. We very closely hit our take profit, and unfortunately we've not at any point here made any returns. In fact, we are currently in a unrealized losses situation. We're going to come across dynamic steps. That brings our average price all the way down, and we're able to hit our take profit at a really nice point here. And then lastly, again, we're going to hit dynamic volumes, and not only have we taken profit here, we've also taken profit here. Oh, in fact, there are two. There's one here, one again, so you can see just how effective this strategy really is when compared against basic sort of traditional safety order steps. We then have the dynamic steps, and then we also have dynamic steps with dynamic volumes. This strategy really is very effective. Now, dynamic steps, you are spending the same amount as if you was using basic steps. you're spending the same amount of money. However, when you use dynamic volumes, you are spending more, and it's going to be significantly more. But what you have is the advantage of being able to get out of effectively any real difficult trade by bringing our average price right in line with the current price. Now, at what cost? That really depends on what your own risk tolerance is. But yeah, you can just see how effective this really is. Okay, so now that we've got a good core understanding of how the Advanced DCA tool works and what the main features are, we're just going to run through the settings list here, and we're just going to go through each of these settings and just have a little bit of information about each one. So entry strategy, we've got 3 options to choose from. First one, we've got basic signals. Now that name really doesn't do it actually much justice. So the signals are based off of Ishimoku Cloud. We've got stochastic oscillator, MACD, EMA, RSI, we've got strength indicators and time frame resolutions. That all comes into play when it comes to this signals option here. I don't think the word basic really does it much justice, but it's just a good indicator. Anyway, after that we've got ASAP, which is ASAP is quite self-explanatory. We want to start a deal as soon as possible, regardless of what the market's doing, up or down, left or right, it doesn't matter. We want to start a deal. Last one here is ASAP refined. And the way that this one works is this is my favorite of the 3. What this essentially does is it takes a combination of both ASAP and basic. It works by completing the current take profit, so whatever the current deal is, and then it waits for an entry signal. So if the market's moving downwards, we're not going to place any entries until we've found a good signal, a good entry signal. Or alternatively, if the market is actually trending upwards, we're going to wait until the current price exceeds the previous take profit price. So this basically works by almost like a ratchet. So if we're moving downwards, if we're trending downwards, that's absolutely fine. We just don't want to place any orders until there is a good opportunity. And if we're trending upwards, well, we want to bite. We want to be part of that movement. Okay, so this is a really nice option. ASAP works well in bullish movements, but not in bearish movements. Basic signal works quite well by avoiding buying at the peak. However, it does sometimes miss good opportunities. And this is really sort of the best of the both. So do experiment with the 3. Beneath that, we've got these 3 buttons, enable buy alerts, safety alerts, and take profit alerts. Now, by disabling any of these, it will just prevent outputs, our webhook URL messages being sent to free commerce. So the scripts won't be able to, for whatever reason, you might perhaps want free commerce to handle all of the sort of exit signals, for example, or the dollar cost averaging. You might want free commerce to handle those, and the script just handles the buying. Whatever the case may be, you've got that flexibility there. Now beneath that, we have a box that says copy and paste. So in my other video, I explained that once you've created a bot, you would take the deal start message and you would paste it into this box. And from there, you can go ahead and create your alert in TradingView. And that's what will trigger your bot to make its deals. That's really nice and simple to use. It handles all 3 of the messages, just copy and paste it in there. Now beneath that, we've got a few indicators. So if I just turn this one on now. Okay, so the chart can be quite overwhelming for some people, or perhaps maybe you just want something that looks a bit simpler. It depends what your preference is, but we can disable or enable the lines here. So there's your take profit and average, and now they're gone. And then we've also got valid signals. It's our triangles here. Okay, and then we've got our base and safety lines as well. So it just depends on what your preference is. And of course, what it will leave is just our base orders and safety orders on the chart, because we are actually in backtest. Okay, so we'll pop those back on. Beneath that, we've got the option to change our base order and safety order values. Now, this script handles the safety orders entirely. Now, it doesn't matter what value you put in free commas. I sort of explained this in the other video. All of the volumes that are totally controlled for safeties in the script, but obviously provided you want them to. Now, base orders, you will have to make sure that your base order in free commas on the bot is the same as what's in the script, just so that it calculates the averages and the take profits correctly. We can set a take profit value just like you would ordinarily. You know, set it to whatever you like. And then we've got a couple of different strategies. So we've got basic take profit and trailing take profit. So when you use trailing, you will need to use this deviation value here. So what that basically means is you've trailed the take profit all the way to the top of a peak, and then once that peak starts to retrace by this percentage, once it starts to retrace by this percentage, we're actually going to exit the trade. And so a good example of it is, let's see if we can get a good example of this. Okay, so you can see at the peak here, we've reached our take profit, we've trailed all the way up, and then what we've seen is we've reached a high, and this retracement here, the wick of this candle, so that you have open, low, high, and close. So each candle has 4 values essentially, and what it's looked at, it's seen that the high, the difference between the high and the close is equal to or greater than this value here, so 0.25%, and it's exited the trade. So can we confirm that? Let's just have a quick look. So we go from the very top of this candle down, yeah, there you go. So there's actually been a retracement of 1.17%, and it's exited the trade. All right. So it doesn't necessarily have to be a red or green candle. It's not really based on that. It's actually based on the last candle as a whole. Okay. So let's get our menu back up. That's that. That's that. Safety strategy. We've just been through this one. So again, we've got 2 options to choose from: basic steps, dynamic steps, basic volumes, dynamic volumes. Now, dynamic volumes are going to be inherently a lot more expensive to run. So because of that, we do have a max budget per deal. So depending on your option here that you select, we have safety strategy, basic volumes only. So this is what you need to be playing around if you're selecting basic volumes. And if you're selecting dynamic volumes, you need to be playing with these settings. Unfortunately, TradingView doesn't let you hide irrelevant settings at the moment. You know, it would be nice if I could just select this one and these settings would hide, and if I select this one, these settings would hide. But unfortunately, that's not an option. When it does come out, I'll be implementing it. So yeah, just be mindful that the other settings will be irrelevant. So anyway, make your selection here of what you want your deviation to be, your step scale, the quantity of safety orders, and what you will find is that really it would be a good practice to open up Freecommerce and have a look at their table on the right hand corner. Let me show you that real quick. So those of you that are familiar with this, playing around, you'll know that up in the corner over here, we've got a table. This table will allow you to see required price. This is something we talked about earlier, and the total volumes that you'll be using in the event that all of the safety orders are fulfilled. You want to take note of these values. So in the meantime, I am actually putting together a table overlay that will essentially have this exact same thing on the chart, so there won't be any need to sort of faff around with this. You can just do it in the script. But just for now, just whilst we're in sort of the beta stages of the script, we will have to play around with the settings here and then just compare what they are on here. But generally speaking, I really like to use sort of base of the same, or if not the same, then maybe the safety order slightly larger than the base order. I do like to use a safety deviation of maybe in and around 1.75 to 1.8, 1.7 to 1.8. So yeah, just for now, play around with safety values, and providing that you're actually using basic volumes, that will coincide with the amount used for each step in Freecommerce. So back over here, you'll notice that we have an additional setting here that says enable break even after last safety. So depending on how many safety orders you have as a maximum, right here we can see that this particular trade, let's set this value to a maximum of 3. We can just see this one in action. Enable break even after last safety. Okay, so there's our last safety order 3. And it's came up and it's broke even. it didn't want to try and achieve its take profit. We've just broken even. Now that, because of the nature of this, chances are there is going to be a small loss because there are fees involved, there's slippage involved. But at least if you're wanting to get out of a losing trade, you can. You've got that option there. And if I was to disable that one now, the trade will continue because we haven't hit our taken profit and our safety orders are actually quite limiting towards it. So if I hit that one now, okay, and you'll see it will continue to dollar cost average. Anyway, desired RC, so all of these settings here are related to dynamic volumes. Now, the tighter the desired required change, the more expensive the deal is going to be. Why? Because you have to spend more to get that required change, that desired required change, to be a tighter tolerance. So we have a look at this deal, for example, here, safety order 1 is $27, safety order 2 is $81. If we were to set that now to 1%, okay, here we go. This is now 47 and 182, so big difference. Let's put that to 2% now. Okay, so now it's a lot more slack, $23 and $53. You know, big difference. You have a little play with that, can make it all the difference. And actually, the lines themselves don't look too dissimilar from each other. So, maximum budget. Now you've got two options here. You can be one deal under budget or one deal over budget. So let me just talk to you about that. So we've set our maximum budget of 1,000, and it won't place any more orders. You'll notice that we don't have an order here. It won't place any more orders if it believes we are going to go over budget. Okay, and that is calculated. It knows probably by this point here that it's not going to be able to afford the next safety order, so it chooses not to. Okay, we got $390 plus 81 plus 27. Okay, with a base order of 12, it's added all that up together, and it knows that the remaining balance is not great enough to allow this order to be placed. What we do have here is enable break even after the maximum budget has been made. So let's say, for example, that our maximum budget is, let's say, 600. Okay, there you go. Awesome. So our budget was 600. We've not placed any more orders, and our break even has been made all the way over here. In realistic terms, that calculation that says that we're not going to be able to place the next order is going to be happening when we're probably around, when we're underneath this line. I'd probably say around here. Okay, so it would have latched on. It would have said, okay, we're not going to be able to afford the next deal. Latch on, and as soon as we can break even, then we will. But unfortunately, we haven't broken even there, and we've broken even over there. Second to last, we've got stop loss strategy. So we have the option to enable or disable our stop losses. We're going to plot them on the chart, and then what we'll have is we've got, do we want to show them, just like these buttons here? Do we want to show our stop losses? Yes, we do. They're right there. And then we've also got three options, three different stop loss strategies. So below our base order is as it sounds. Beneath our white line, we've got a stop loss of 1%. Now that wouldn't really work in this situation because we have a deviation of 1.75. But let's say maybe you had 5% stop loss beneath the base order. There we go. We can see that's plotted underneath there now. Okay, and then we've also got another one below the average. So wherever the average is, the stop loss follows. Okay, wherever the average is, the stop loss follows 5% beneath it. My favorite one, if I was to use a stop loss, would be percentage below the last safety. And I would actually use a tighter tolerance really for that one. So here we are, stop loss, deal one, stop loss has happened. Now it's realized that after our second safety order, it's not going to be able to reach our, so we have a maximum budget of 600. We're going to go over budget. and it's decided to place a tiny little dash there. It's quite difficult to see, but that's our line, that's our entry point. Okay, which interestingly is bang on the line. Ordinarily they're beneath the line of dynamics. But yeah, we have a very small stop loss line there, and we've decided to take stop loss. All right. Again, we've got another example over here. Deal 1 stop loss. Okay, and we've got our little line up there, and we've stopped beneath it. All right. Now, I did forget to mention this whilst recording originally. We do also have a third option here, which is stop new deals on trigger. So what that does is, in the event of a stop loss being triggered, obviously there'd be no more safety orders being placed because we have now exited the deal. But in the event of a stop loss being triggered, no more new deals will be triggered. So the script will essentially come to an end. If you would like to continue trading that particular crypto, you will have to create a new alert and start from scratch, because the bot will cease to output Freecomm's webhook URLs. It will cease to output any more alerts until a new alert is created. So that one effectively sort of commits suicide. Effectively, it stops working entirely. Lots of functionality here, lots of functionality. So but at the very bottom here, we've got our start and end times. Now, this is really important for setting the bot up for use with Freecommers. It enables you to choose when you want the bot to start running, and typically I would normally set the bot to start around 10 minutes from the current time. Just gives TradingView a moment to handle the request, and everything from then on is automated by the script and TradingView itself. So it's really important to note that with these scripts and webhook URL alerts created in TradingView using a script run 24/7. So there's no need to keep TradingView on your computer lit up, or the tab open or anything like that. They run 24/7. The moment the alert is created, the script and all of the settings that were created at the time are stored externally on TradingView servers. So any further adjustment to the settings will not be accounted for. So any further adjustment that you start making here after creating the alert won't affect the script, which is really great news, or bad news depending on the situation, really. So if you do need to make adjustments, or you do want to make adjustments, you will have to delete that alert and actually change the settings in here and then create a new one. All right. Okay, so we're nearing the end of the video now. We've just got a side-by-side comparison between both the LITE version and the Pro version of the Advanced DCA Tool. So what you'll find is the Advanced one does have a lot more settings and adjustments. Really, the LITE one is intended for people who are perhaps a bit newer to trading, or they just want to sort of plug and play. Away you go, press start, and hopefully make some money and make some profits. On our entry strategies, we do have we've got basic signals and ASAP signals, whereas over here we've also got ASAP refined. We've got our same functionality here with our copy and paste. We've got the same functionality with our indicators here. Same again with our take profit strategy, both basic take profit and trailing take profit. We have got the all-important basic steps and dynamic steps that you can switch between. We have gone ahead and omitted the dynamic volumes here. And then because of that, you'll notice that the safety strategy is a bit shorter, mainly because with the volume strategy is basic only. Okay, whereas on the pro side, we do need that option between the two here. All right, now at the very end, we've got stop loss. Got our stop loss. A stop loss strategy is based off of the average, whereas this we've got average below the base, and we've also got below the last safety. Start and end times exactly the same. Set up your bot exactly the same as you would with the LITE version or the Pro version. I just want to give a quick shout out to Trade Alts and the community. Excellent YouTube channel, really great information. For people who are just starting out with DCA bots, or people perhaps who are a bit more attuned to it. They've got a great community of users, and they're keen to research and develop their trading knowledge. I just want to give another shout out to some of the creators and backtesters out there as well. And lastly, I just want to talk about how to actually get the script itself. Here we are. It gives you a good overview of what's involved, what you get. There's a few posts on here as well. It's got the YouTube channel. Yeah, do have a look. So if you like what you've seen in the video, and for those who are interested, I am publishing the Advanced DCA Tool as private invite only. If you'd like access, I'm going to be hosting a short period where the strategy is available on a pre-release. Now, disclosure, this is a paid strategy. Put a lot of effort and time into this strategy, an incredible amount of groundwork and expense has been had just to make sure that it functions as expected. The good news is if you get in early, you can get it for a nice discount. I think creating strategies like this require a few things. I think number one is you've got to have a good fundamental knowledge of trading. The second one is you've got to have an understanding of how to write programs, not necessarily the language, but the fundamentals of writing code. And lastly, the ability to experiment with strategies. You've got to have that creativity to employ them into your programs. So all in, what we have here is a really powerful tool, not only to assist, but to fully manage your entry signals, your dollar cost averaging, your exit signals. You've got a bunch of features that allow you to customize and come up with profitable strategies. You're able to choose different signal-based entry strategies. You've got trailing take profit or trailing stop loss. We've also got the ability to place dynamic safety orders that are tailored and are bespoke to the crypto that you're trading. We're able to enable break even for cryptocurrencies that become a little bit difficult to exit. And as a final countermeasure for volatile cryptocurrencies, maybe if situations really go south, we have the ability to place stop losses beneath previous levels of support and resistance. Just as a final thought, we've got some up and coming features that we're looking at adding to the script. Looking to add a table overlay. We're also looking to add a trailing break even and some other cool features too. So if you like what you've seen in the video, and for those who are interested, looking at the long term, probably not going to use the BuyMeACoffee platform, but do keep your eyes peeled and have a look in the description of the videos. See if the platform itself has changed with regards to getting your private invites. And last but not least, we do have some freebies and referrals down here. Obviously, we mentioned before, you will need a TradingView Pro account. You're going to need a free commons account, and you're going to need an exchange like Binance or FTX, for example. Here you can get $100. You've got a few free days of using Free Commons Pro, and again, TradingView Pro, just so you can get those webhook URL alerts out there. You will need that one as well. So yeah, that's pretty much it. I hope you enjoyed the video. I hope you're excited as I am. Take care. Cheers. Bye.